switch on.
Hello, ladies and gentlemen. Are you able to hear Mwalimu now? Are these ninjas able to hear Mwalimu now? We shall give ourselves only 3 minutes and then we get started if they can't hear me. And I lag behind the bad, right? Hello, ladies and gentlemen. Are you able to hear Mwalimu now? These ninjas able to hear Mwalimu now? We shall give ourselves only 3 minutes and then we get started if they can't hear me. All right. So, ladies and gentlemen, sorry for the inconvenience. You can see today I'm using a very great microphone here. We must always get a solution to some of these things, eh? Yeah, always. Wanasema maziwa ya mama yakikosekana hata ya umbwa ni mazi. Because the kid must survive, isn't it? The kid must survive. The kid can't die because maziwa mama hakuna. All right. So then we start now doing this question right away. And before I get started, ladies and gentlemen, I would want to make a request that you have your classmates, of course, who haven't known where we are, share this WhatsApp, not WhatsApp, but Facebook link with them. Just share the video with them. So we are doing this April 2022, question number 5. I can see Irene Ogola here. I can see Lilian B. I can see Harriet. I can see Edin Adan. Very good. So we are told here April 2022, question number 5. Smart Products Limited operates standard costing and a budgetary control system. The following is the company's standard cost card. You can see direct materials, direct labor, variable overheads, fixed overheads, standard cost per unit. You can see standard profit per unit. You can see standard selling price per unit. Each unit requires 3 kilograms of materials, which costs 40 per kilogram, and 45 minutes of direct labor at a rate of 80 per hour. Variable overheads are recovered on a direct labor hour basis. Fixed overheads are absorbed on an annual production budget of 180,000 units. Note 4, for the year to 31st March 2022, 120,000 units had been manufactured and sold. Contrary to the management expectations, the company's profit and loss statement reflected a loss of 1,380,000 instead of the expected profit of 36 million as provided below. So they want us to give them the budgeted profit and loss account for the year ending 31st March 2022. So is there somebody who can easily do this for us? This is really easy. So you start by mentioning their budgeted profit and loss. So we start with sales revenue. So sales revenue, I will be taking what times what if you are able to follow for sales revenue. Anybody who can guide me to know what figures will I take? Of course, I know revenue is money coming on board, and this revenue will be price times quantity. But which selling price am I going to use? Which quantity am I going to use? Janine. Which price should I use? Abracadabra. 20, eh? 120. I mean, I can't hear you guys. How about the guys who are online? I can't hear you guys. So remember, if it's budget, I can't get any figure from the actual. I'm getting things from the standard cost card, isn't it? So I'm getting things from the standard cost card. So ladies and gentlemen, then I'm able to see the standard selling price of 200 what here? 50. So I have here 250 times now the quantity that is budgeted. In most cases, how many units? Remember, 120 is actual. So in most cases, they will be silent. They may not even tell you that these are the number of units here that are budgeted, but a good student, look at how they are absorbing fixed costs. Fixed costs are normally absorbed on a budgeted output. Are you able to see somewhere there? Are you able to see somewhere there, ladies and gentlemen, where they have told us in note number 3, fixed overheads are absorbed on an annual production of 180,000? then that is the budgeted output. So many guys messed up on that. And remember, when you mess out, especially on budgeted output, then you get 0 in the entire question. And if you get 0 in the entire question, there are high chances that I may teach you again next time, which will be very unfortunate. Yeah, I would want to teach you, but at a higher level, isn't it? We call that one seeing places that you've never seen before. So 250 times 180,000. So this one here will be able to give us how much in terms of shillings. The online ninjas, remember today I'm going to give very good presents. Yeah, today, good presents. The physical students, I have money for you here. The online students have M-Pesa for you. Yeah, if you'll be very, very seriously giving me answers, like Adan has already given me something there. So how much are we talking about here, somebody? For 12 million. Thank you so much. Thank you so much. So remember, it's P and L. Once you've been able to give me the sales revenue, the next thing will be you to capture the costs. And you are a management accountant. You know how our costs flow like. How do they flow like our costs? We have direct material, direct labor, variable overheads, and the fixed overheads. Thanks, Mercy. At least Mercy has given me a figure of 45 million. So we start our costs. So our cost, we write there, the first one is direct materials. So how do we get this direct material cost? We just know how much we shall incur in terms of material cost per unit. Do you know the figure? So what is that figure? So you see in the additional notes, they told us that we need 3 kilograms, each at 40 per kilogram. So 3 times 40, that is 120, isn't it? We were just putting that one there to confuse those students who are easily confusable, and they are not in this class. Because you see 3 times 40 is 120, and 120 is the one that is given there. Are you able to see up there? Direct material is 120. So then I should take 120 times what? Remember, this question does not have any stocks. It will be 120 times the budgeted output for a whole month or a whole year, which is 180,000. Thanks, Sherry Lakendo, at least for giving me an answer there. I want to get, in this case here, answers from every student. So how much do we have there for direct materials? 21,600. 21,600. Like that, isn't it? So after that, ladies and gentlemen, we have here direct who? Direct labor. We have direct labor. So direct labor, now we've known the pattern, isn't it? The pattern, we know the labor there is 60, right? If you want, you can take that 45 minutes, which will be 45 over 60 times 80. But why should we do that? We can see there, the standard cost card is for 1 unit. And we can see there, direct labor is what here, somebody? 60. So 60 times 180, isn't it? So 60 times 180,000. Who can easily give me that figure? 1080,000. 1080,000. Where is Marion today? I can't see Marion today. Is she going to come? Or you don't know? You need to be knowing, where your classmates are. It's very, very important. After that, now we know as management accountant that the next one will be what here? Somebody variable overheads. Thank you so much, Bettican. You must be a very, very good student. So we are told there are variable overheads. Variable overheads. So we go to variable overheads. So variable overheads, how much are we able to see there? Per unit? Yeah, please always feel free to ask me questions. Feel free to ask me questions. So variable overheads, are you able to see 20? Any problem, always feel free to ask me questions. Or my figure is wrong. This figure is wrong, right? It's supposed to be 10,800. Oh, so you want it to be 10.8 million? Okay. Great. Thank you so much. That's so kind of you. Now, variable overheads. Are you able to see variable overheads per unit? Oh, yes. I can see variable overheads over how much, even if you don't want to talk to me. 20. So 20. Again, times 180,000. 20 times 180,000. Aha, great. Yes, how much? 3.6 million, right? That amount of money, if somebody in this room was to be given, chances are they may stop coming for an MA class, right? Sure. But 3 million is not a lot of money. Yeah, this should not make you two. Maybe if it's 300 million. From there, we have the very last one there, which is what here? Fixed overheads. Fixed overheads. Fixed overheads. So fixed overheads, of course, I'm absorbing this on a priority basis, and it has to be always absorbed on the budgeted. So fixed overheads, how much do we have there? 30. So you take here 30 times 180,000, which will end up by giving me what figure? 534. 5.4 million. So, and that is it. Go ahead and give me the net who? The net profit, isn't it? Don't put these things in brackets because I'll be flexing them. Just leave them like that, but you're a bright student. You know now to get net profit, you'll take this as an income, and then you subtract this, you subtract, you subtract, you subtract, you subtract, until you subtract yourself. What do you mean by that? You know, management accounting, you have to be very excited as you do an exam. When you are very excited, you'll be able to see so many easy things there. But otherwise, like in this sitting, most students came from the exam room saying that Mwalimu, we could not answer anything. Why? This is a straightforward question, honestly. So, and that is one thing I've never understood, why in this case here students tend to panic a lot in an MA paper. I don't know whether it is the color of the paper or the smell of the paper. Yeah, you'll simply go as an invigilator, put a paper in front of an mzee like myself who is a student, and then they start sweating. No, you shall never sweat when doing this paper. So what net profit are we getting, ladies and gentlemen, here? This minus this minus this minus this minus this. 3.6 million. Thank you so much. The online guys, I can't see you guys giving me answers there, but I shall overcome. The online guys, I can't see. I can see them. I'm the one who was not opening some screen here. Great. Thanks, Cheryl. Thanks, Betty-Can. Thanks, Harriet. Very, very good. So we have been able to do number one, which wanted us to do a budgeted profit. Number two, now they want me to give them a flexible budget. Is there somebody who will be able to flex as in, I have to do it. So the very first thing that I will do in this flexible budget is to calculate the flexing ratio. This tall man is tough, man. So first of all, we get flexing ratio. Net profit from Sherry Lakendo, 3.6 million. That is very, very good. So go down here. Number two, calculate the flexing ratio. Write the formula, and then most like, or rather, the very best thing you do after writing the formula, calculate the flexing ratio for me. I'm almost giving my present, and for me to give this present, ladies and gentlemen, ensure that first of all, if you're online, you are following my page, either on YouTube or Facebook, and ensure you're following my page. That's number one condition. And then the second condition is that you shall share this video on your timeline. And say, this is my teacher. Teacher. Just that. And then I'll be able to select who to give this particular present. Great present that I'll be able to give. Great present that I will be able to give. And of course, you must love that video. If I was on TikTok, I would have said tap. Is it tap or something like that? 0 point. So you're right. So you told me, first of all, to take actual what here, somebody? Actual output over budgeted output, isn't it? Over budgeted output. So are you able to see the actual output in this question? So the actual output, my good students, that I can see is 120,000, isn't it? So we have here 120,000. All over what here, somebody? Budgeted is 180,000. From what I can hear you guys talking about, it's like that ratio will be an ugly ratio. So if it's going to be an ugly ratio, I would rather just maintain it as 12 over 80, just as a fraction. Yeah, or even, make it even much proper, but 12 over 18 is very good. You can cancel all the z. So like, what will we do with this flexing ratio? Very easy. I will be able to come and write here the flexible budget. Flexible budget, where I am aware that I will be taking this flexing ratio, multiply it with all the dynamic elements. Multiply it with every other element here apart from what here somebody fixed. Because all the others are dynamic. They change as output changes. So we start with this one here. So you take this one times this 12 over what here somebody 18. So how much sales do we have? You can still use that 0.666 something, but you're going to get some errors, a little bit of errors, which nobody can penalize you. 670. 675,000. That's small. Are you sure? From 45 million. 30 billion. How are you getting that? That will be very small. 30 million. No, Okay. Take 45 million, you say times 12 over 18. 30 million, It's okay. 30 million. And my good students, even if you're 150. Yeah, because that rounding off errors will mess you. When you realize you're going to get a recurring figure, we are always told to use a fraction. Fraction will be more accurate. That 150,000 will make you, go wrong totally. Use a fraction. Use a fraction. Thanks for bringing that up, because I've always seen that messing up students. And that fraction, even if you decide to use here, somebody can argue that, well, if you use 6 over 9, the answer will be different. It will be the same. This one, if you divide by 2, it's 6. This is 9, isn't it? The final answer, if you take here 45 million times 6 over 9, it will be 30 million. It will be 30 million. The online ninjas, all of us, are we in agreement that the final answer will be 30 million? The final answer, thanks Masia Tor, you never let me down. Thank you, Harriet Wanjiko, very, very good. Irene Ogola, thank you so much. Eden, please, if you use that 0.666 something, 7, you're going to mess. It's going to give you some errors there. Whenever we get a recurring, like you get a number coming to 0.333, always prefer the fraction. Prefer the fraction. So I'd apply this fraction throughout. So say times 12 over 18, times 12 over 18, times 12 over 18. And then, of course, the fixed, we can never flex fixed things. Fixed things are like that. They remain. So is there somebody who can give me the direct materials and a flexible budget? The first one is 14,400, right? So we have here 14,400,000. Yeah, thank you so much. Thank you, Cecilia, for the response there. Thank you, Lillian B. Thank you, Karaoke Rahab. And I hope you guys are doing Mwalimu a favor. You are sharing this particular video on your timeline. You are sharing it on the various, not WhatsApp, even WhatsApp groups here. You can tell somebody, there's a share button there. Just pick that share button, take it even to WhatsApp, take it to your various WhatsApp, Facebook groups, etc. Thank you, Masia Tor. Thank you, Harriet. So this one is supposed to give me what figure? 2.4 million. No. 7.2 million, That makes sense. How about this one here, 2.4 now? This 2.4 million. Thank you so much. And then now, last, ladies and gentlemen, what do we have here? Well, it's fixed. We don't flex at all. We carry it. 5.4 million, isn't it? So are you able to give me the flexible profit? Flexible profit, you take the revenue, minus this, minus this, minus this, minus that. Give me an answer. Thank you, Cecilia. They're always giving me answers. So Harriet is giving me 2.4, They're giving me different answers. The final profit here, flexible profit. 600,000. 600,000. 600,000. 600,000. I'm being told that this profit here is 600,000. 600,000. So in an exam situation, do you think you would have gotten this right? Thank you so much. Thank you so much. 600,000 is really, really correct. Is really, really correct. I don't know how Cheryl is getting 7.2. I don't know. Because remember, for the flexible budget, we are taking this minus this, minus this, minus this, minus this, 600. Not unless it's your answer. Maybe you are in an area that has poor network. And now this is the time it is bringing this answer, which you may have forgotten earlier on. So now, ladies and gentlemen, that is it. You know, you'll get some student, in this case, you're sweating here for nothing. Some student now trying again to look for actual, trying to get variances, and yet this examiner wanted you to only do two things: give the original budget and what is somebody flexible. We take on another question with your permission, ladies and gentlemen. I want today, you know, I'm starting my revision now in a big way, So I want us to go to May 2021, question number 2B. May 2021, no worries, Irene. May 2021, question number 2, boy. May 2021, question number 2, boy. So during revision, I'm the one who chooses the questions to do, and I'm never wrong, because I've taught this same paper for many, many years. Never wrong, never. Never wrong. So now we are doing May 2021, question number 2B. May 2021, question number 2B. The question of Zigzag Limited. Zigzag. Zigzag Limited. Zigzag. George, what will remain will be the fixed overhead. The fixed overhead, that one will remain the same, because from the word fixed, that is not dynamic, that is not flexible. We shall flex every other thing. George, thanks for asking the question. But at the end of the day, in this case here, fixed will remain the same. So May 2021, question number 2B. Now, the students who are following me online, can I know whether you guys have been able to like my video? Have you liked my video? Have you liked my video on Facebook, on YouTube? Because if you haven't, then I will come up with a way of ensuring that you guys are able to love your teacher by force. By force. So you love it, and then ensure that you share it with your friends, and then you tell people here that this is my teacher. So Zigzag Limited prepared the following budget for the first 5 months of the year 2020. We are told the months January to May sales budget has been given there. Inventory of finished goods at the end of year, at the end of every month, is equal to 25% of sales estimate for the next month. Is that okay? Are we together really? It's like you haven't gotten the question yet, right? On 1st January 2020, there were 2,700 units of the product on hand. Thank you so much, Betcan. Be blessed. There is no work in progress at the end of any month. The selling price per unit was estimated to be $450 per unit. Each unit of the product requires 2 types of materials in the following quantities. The closing stock of material is equal to a half of the requirements of the next month's production. So required, they want us to give them for the months of February, March, and April 2020, prepare sales budget, production budget, material usage budget. So I will keep silent a little bit to see whether there is anybody who will be able to calculate for us, or rather prepare for us, the sales budget. The easiest stuff, sales budget, the easiest stuff. If I were you, I would remember very fast that sales budget, you simply give us quantities, selling price, and the sales revenue. Just that. Finished. Finished. So I'll simply write a big title there. Sales budget. Big title. So we have here sales budget. Yeah. So we have, of course, if I'm the one doing this, I can see the number of months there. Of course, they have told me to do for only 3 months, but there is no harm. You can always do for all the months. You can do for all the months, and then later on you can delete the ones you don't want, but you don't even have to delete. So we have there January. So we have months, January, February, March, April, May. Yeah. And then we have here quantity. So quantity is 10,800. It is 15,600. It is 12,200. It is 10,400. It is 9,800. So I need a unit price. So what do we have here for unit price? The unit price, ladies and gentlemen, that we happen to be having here is given in note number 4. Note number 4. So note number 4, what have they told me in note number 4? 150, isn't it? 450. 450. So of course that is not going to change. If I was the examiner, I would have told you that January is 450, but February it will increase by 10% because I'm a bad examiner. I'm a bad examiner. Now from there, ladies and gentlemen, I can very easily give you a column for sales what year? Revenue. Sales revenue. How do we get sales revenue? Price times quantity. Price times quantity. So we have here price times quantity, like that. Price times quantity. Price times quantity. All right. So we have 10,800 times 450. You know, it can either be price times quantity or quantity times price. So 10,800 times 450. Give me an answer. 48,60,000 there. All right, 48,60,000. What have they done? They've simply multiplied there. You don't have to put those multiplications. I'm only putting them there for purpose of your revision. Thank you so much, Harriet Wanjiko. Thank you so much. Thank you so much. Then we have 15,600 times 450. Are you able to cope with my speed, by the way, or am I too fast? Great. Because now today you're not talking too much like the way you normally talk. So either you never had lunch, I don't know, or just a bad day at work. Maybe your boss shouted at you, which is very bad, isn't it? 7? 720. Like that. That's too huge. 720,000. Thank you so much. We got the month of March. 5490. Like this. All right. Then we go to April now. 46. 80. 4410, eh? 4410. 4410. So that is the sales budget. Was it really a hard thing really to do it? I mean, this is a baby class kind of a thing. And that is management accounting for you. It wants you to just be brave. If you're brave enough, then you'll automatically get to pass. So then the sales. Yeah, I forgot. How could I forget this? Yes, because you're doing a budget. So, and if it is then totals, then you have to remember that the examiner doesn't want January, and the examiner doesn't want to what year somebody. You can just give it one cancellation because they wanted the sales budget for February, March, and what year somebody? April. You can just cancel it professionally because you see at times you need these other previous months to work out as part of your workings. So you simply get like a pen and then you cancel this professionally. Remember, these are sales budget for the months of February, months of March, and April, like that. February, March, and April. So for us to know in those 3 months how much total do we need. So is there somebody who has an answer for me? 17? 190. For the 3 months alone, isn't it?
Yes.
Thank you so much. So that is it. And now you can go straight away to the next budget asked there, which is production budget. Yes, production budget. Production budget. So production budget normally comes from which budget? They're not sure. They're not sure. Please make reference. Production budget normally comes from which budget? From sales budget, isn't it? I simply need to adjust the sales for inventories. For inventories, isn't it? So production budget. No, remember you're not purchasing, we are producing. Yeah, finished units you're producing. So in this case here, production budget, I will take the sales. I add who? Yeah, so I take the sales and then what do I add? Closing stock. Closing stock. Closing stock. Closing stock. We add the closing stock. And then what do we do? We less opening stock. Less opening stock. So remember to start with the months given. So months given are which months here now? January, February, March, April, and May. Then again, don't forget, ladies and gentlemen, that sales has to be sales quantity. Don't bring sales money here. It has to be sales quantity. So are you able to remember our sales quantities? Are you able to remember our sales quantities? 10,800. Yeah. For January, isn't it? Yeah. February? 15,600. March? 12,200. April?
10,100.
May? 9,800. Now from there, go ahead and calculate for me the closing. Closing stocks or closing inventories for each of the months. Calculate them. Closing stocks for each of the months. Closing stock for each of the months. So I can see today the physical, or rather physical, not physical, but online students, they're only 37. That number has reduced. Is it because I'm trying to use a new software? Because you must always keep on innovating as a school. So we have procured a new software that I would be, but I'll not be using this microphone. It's because the normal one had a problem. I can't be using this microphone. So closing for January. How much do we have for closing January? So Felista tells me 2,700. No.
That's 900.
3,900, eh? Yeah. So they've told us their inventory of finished goods, not one, at the end of every month is to be equal to 25% of sales estimate for the next month. So then January, we're going to take 25% of next month. So 25% of this gives me what figure? 900. So I'm being told 100. Because what they're telling us is that for you to get closing stock in a particular month, look at the sales of next month, just get a quarter of that. 25 over 100 is a quarter. I don't know why today my online students have picked 2700, but there is one lady who was the very first to get it right. This lady was the very first lady to get it right here. Was it only one or many of them? No. Only one or many who were the very first. It was only one. It was only, yeah. It was, and that's tone. I can't give you a tone. I can't give you a tone one. Huh? Are you sure you got it? I doubt. Why did you not shout it? Why did you not shout it? Why did you not shout it? And then the others now can share this. The others can share this. The others now can share that. Yeah, that makes it much better, isn't it? Yeah, the rest 1,000, but yours is 1,000. Yeah. Online ninjas, you're not getting anything because you say 27. Nothing. All right. So then we go to February. So February, we shall take 25% of the figure over March. Is that okay? So then how much do we have, ladies and gentlemen? February, we have 30/50. Then we have the month of March closing stock is 25% of next year. Next month, 25% of next month. 3,600. 2,600. And then now we have for the April, it will be 9,800 times 25%. 2450. 2450. Thank you so much. This one I don't want to have it, right? Now from there we have opening stock. Is there somebody who is able to give me opening stock for the month of January? No present there. No present. Their presents are only given once. Is that being unfair? And from today until you do your exams, you shall be getting presents every day. So long as you are very active, you are doing my homeworks every day. So you can see, ladies and gentlemen, note number 2, that on 1st to January 2020, there were 2,700 units of the product on hand. So you can see opening stock 1st January, it was what here, somebody? 2,700. And then opening stock for February will be closing of January. So if we close to 3,900 in January, this is what we open with. Would have you reasoned like that? International disaster, eh? So you can see the closing for February. This becomes the opening for March. So you basically use this. Do like that. 2,600. And then of course this 2,400 there, 2,450 like that. But you see the budget that they want at the end of the day is for which month? Yeah. So this is basically your work. You can now come and cross this. Nobody can up to April, you can cross those two. Now you can very comfortably come and give me the production quantity here. Present for online people, they are not going to leave me. I have to give present for the online people. Yeah, sure. I'll be able to give you a question. If you get it right, I'll also give you a present. Yeah, why not? All of you are my children. So production quantity, now you are taking February sales plus closing minus or opening. You give me an answer. 14,750 here. 14,750 there. March. April. 10 to 50. 65.50, like that. Are you sure? A very good student is asking why. No worries. So 11,750. 11,750. Now a student is asking why are we using sales in units and not sales in terms of shillings? Can you help me answer that question? Because you see, like now these stocks are not given on monetary terms. Closing stock and opening stock, of course, in this case here we have them in terms of what here somebody, first of all, quantity. And then, of course, the other reason would be when you go to the subsequent budgets, like which one? Subsequent budgets. The ones following production. Usage, isn't it? I would want production quantity because I'll be given usage per unit. Usage per unit. Thank you so much. I hope I've answered you. Net Nash. Marcia Torre is saying this is 14,700. They're saying this figure is not right. Is it right, this figure? Yes. It is right. Thank you so much. Now from there, we go to the next question. The next question happens to be the last question, right? Is the next one the last one, or do we have another more? The next question is the last one, isn't it? So they want us to give them material usage budget in net Nash. This answers you better. Material usage in units. Can I give you 1 minute to try to see what we shall be able to do to get, in this case here, the usage? Thank you so much, Esther. Yeah, great. Unaeleza they have sisters, brothers. Really soft. They have sisters, brothers. All right. So we have a net saying that they are a bit lost in terms of no, we cannot move that to in terms of shillings. No, don't move this with shillings. Always use units. Use units. Yeah. And then how do we get, in this case here, opening stock? They have told us once you have closing stock, the opening stock for January has been given. And then now the opening stock of February, you just reason like what we cleared with the month of January as closing January, 31st of January, is what becomes the opening stock in when? February. So this one here becomes opening stock here. This one here becomes opening stock there. This one here becomes opening stock there. And that is it. Now from there, we can very comfortably do the usage budget now, isn't it? So we can comfortably do the usage budget. So usage budget, we have here February, March, April. So we have here production quantity. It is 14,750. Then we have 11,750. Then we have what here, somebody? 10,250. And then we have, in this case here, usage per unit of which material? Material A, eh? Material A. So are you able to see that usage per unit of material A? How many kilograms do we have here? 4. How about this? 5. So it's 4 yote. So 4. Is that okay? Yeah. And then I'm able to get the total usage material A. So then this one is what here? 59. 47,000, yes. 41,000, thank you very much. So then if you wish, yeah, total usage for A. If you wish, you can use the same table, yeah. So usage budget of A. If you wish, like what I would have done if I'm the one doing this, I'll come and do a different table, eh? Usage budget for B, isn't it? So we have February, March, April. Production quantity is the same. So here we have 14,750, 11,750, 10,250, isn't it? And then we have here usage, yeah, per unit, isn't it? Are they dollars? Kgs, isn't it? Yeah, 5 kgs. Then you're able to get the total usage for B. So this times this, isn't it? Yeah, you multiply. This is 70, 750, 58, 750, 51, 250, isn't it? I don't need the totals for these because what I know later on, I will be required here to do what here. Even if we were to get the total, they are birds of the same feather. If they are kgs, you can still get total and you get total there. So is that okay, ladies and gentlemen? Is that okay? Thank you so much. So for my revision program, we shall be able to move on to the next concept, which of course will be very easy concept because we've got only one objective. We must pass all of us. We must pass all of us. April 2024, question number 5A. April 2024, question number 5A. 2024, question number 5A. So April 2024, question number 5A, ladies and gentlemen. Hawk Limited uses a standard absorption costing in its operations. We can see the following information is provided by the cost accountant. Let me write the question properly here, sorry. So April 2024, question number 5A. We are told, yes, Omar, is it about prayers or something? I think we forgot prayers, which is very, very bad. Net, we shall be able to realize, some of these things we shall be able to tackle them as we progress, if we get a question like that. In most of the cases here, your questions are direct. They're direct. Yes, I will upload it on the LMS. Yes, I will. So I hope they've gotten this question. Hawk Limited uses a standard absorption costing in its operations. The following information is provided by the cost accountant. So you can see selling price per unit. We can see variable cost per unit. We can see output and sales. We can see total fixed overheads. So they want us to give them the sales price variance, sales volume profit variance. We have here 3, fixed overhead volume variance. So then I will be able to give you 5 minutes, not 5, 10 minutes. You try this. Do the question. Do the question, and then we mark. So now this is an opportunity, especially for the online students, to get their present. The online students, ini wakati wako. Yes, Esther, it shall be uploaded. Yeah, sure. It shall be uploaded. 10 minutes, do this question. So let's continue, my good students. So the first one, they want me to give them the sales price variance, isn't it? Let's see what we have there. Sales price variance. So this one here will be the standard selling price minus actual selling price. And then outside here we have actual quantity done what here somebody sold. So in this question, are we able to see the standard selling price? It will be the same as budgeted selling price per unit. How much are we able to see there? 3,100. How about the actual selling price? 2,600. Yeah. Then are you able to see in this case here the actual quantity sold? 8,200. Are you able to see the output and the sales and the actual? Yeah. Output and the sales units, 8,200. Do you want to tell me that you missed out on this? Don't worry, we shall overcome, right? We shall overcome. Everything will be okay. It's a learning process. Sister has not agreed with what I'm doing. We are overcoming, right? We are overcoming. So then how much are we able to get, my good students here? 4.1 million, isn't it? 1 million. Did you remember that variances are supposed to be interpreted always in the opposite way?
Yes.
Yeah, so is it positive or negative? So if it's negative, we take this as? No. Is it negative? So this is supposed to be positive, right? The answer is positive, right? Yeah, but because it's exceptional, then automatically becomes what here? Adverse. The answer is not negative. The answer is positive, but sales variances are supposed to be interpreted in the opposite way. Remember, all positive variances are favorable except sales, fixed overhead volume, fixed overhead capacity. Thank you so much. This one, everybody got it right. Now, after that, ladies and gentlemen, now we can go to the second one, isn't it? What is the name of the second one? Sales volume profit. Yeah. Sales volume profit variance. So basically, this will be budgeted volume minus actual volume, isn't it? But outside, what do we put outside? Standard contribution margin, and yet the examiner is talking about profit. I must be a bad teacher. So because it's profit, so now we talk of standard profit per what here, somebody? Thank you so much. Because we said outside here, it is either we have standard profit per unit or standard contribution margin, depending on what the examiner asks you. This examiner has asked you to get sales volume profit variance. In this question, many students were not able to get the profit. Many students don't get the profit. Now, this is where I will be able to give a present to that student who is online who got this correct. We shall seek Omar Karisa. We shall see this. We shall see this. So could you kindly give me the standard fixed cost per unit? Standard fixed cost per unit. Anybody who is able to see this standard fixed cost per unit? Oh yes, I can see. You know, standard means coming from budget, isn't it? I can see the total budgeted fixed cost down there, 552.20. Divided by budgeted output, which was what here? Budgeted output was what here, somebody? 8,700. It's like here they're not following very well. We divide by budgeted output. So this one will give us how much here? 600, 600 per unit. And therefore total cost per unit, it will be variable cost plus who? Fixed cost. So remember, I want the standard. total cost. So standard total cost, I will take the standard variable cost plus standard fixed cost. Standard variable cost plus standard fixed cost. So are you able to see the standard variable cost, my good students, under the budget? Under the budget, these guys are tired. Under the budget, I can see 1,000, isn't it? So 1,000. Yeah, plus your 600 now, isn't it? 1,600, like that. Yeah, and therefore, the standard profit per unit. Standard profit per unit. Do I have the standard selling price? Standard selling price up there. Already we have been able to use it. 3,100. So then this will be 3,100 minus this 1,600. Mm-hmm. Mm-hmm. 25 or 15? How much? 15, eh? 1,500. Thank you so much. Then come back to this one. Come back to this one. Are we able to see the budgeted volume? Anybody who is able to see budgeted volume? I'm alone, but I'm overcoming those tables. The cells are very few. You should be able to read. Budgeted volume is written there. Budgeted volume, that is the same as output. You see volume and output are the same, eh? Then you go slower. If you see them being quite like that, there must be a problem. There must be a problem. At least the online guys are seeing 8,700, isn't it? 8,700. Actual volume, how many units are we talking about actually, which you produced? Actual volume. You see, volume is the same as output. 8,200, isn't it? So 8,200. Do we have the standard profit per unit? 1,500, isn't it? So then what answer are we able to get? And then we give a present. Now we are giving a present. Don't forget that this is a sales variance, and the sales variance are always interpreted in the opposite way. Sales variances are always interpreted in the opposite way. 750,000, right? 750,000 adverse. So is there an online student who got this right? Any online student by any chance who got this right, we send them 1,000 bob. Who was the first one to get it right? Online ninjas. Online ninjas, online ninjas. Is there anybody who was very quick to get this so they can grab my 1,000 shillings? Who was the very first one to get this right? So that we give them my present. Were you able to get this, Omar, right? Omar, were you the first one to get it right, Omar? Were you the first one to get it right? Who was the first one to get it right? Is it Omar? So because there is nobody who is it Omar who was the first one to get it right, the correct answer right? Because there is nobody who is disputing, then Omar, please give me your phone number. Nobody is disputing. Give me your phone number. Yeah, give me your phone number. Nobody is disputing. Nobody is disputing. So, Mara, I'm waiting for your phone number. I clear with you right away. Now Omar is nowhere. Omar is nowhere to give me, the number. I will end up wasting time. I don't want to waste time. Okay, then Omar does not have a phone number, unfortunately. Unfortunately. Huh? You give me a phone number. But you are a student in the physical class here. Esther is saying something very, very nice. Mwalimu do what we call gender balance. Omar and I, very good. Very good, very good. That's a great daughter. Very good, very good, very good, very good. All right. All right. So, ladies and gentlemen, the last question, they want us to give them what they are calling fixed overhead volume variance. So, fixed overhead volume variance, fixed overhead volume variance, this one here will be budgeted volume minus actual volume, isn't it? Multiplied by standard fixed overheads per unit. All right. So then budgeted volume, we know volume is the same as output. We know how many units were we budgeting? 8,700. 8,700 minus actual volume. Actual volume, how many units? 8,200. 8,200. 8,200 multiplied by standard fixed cost per unit that you guys had given me as 600. You guys had given me this as 600. So then how much do we have here? Adan, wachana na huyu anaitwa Omar. Apeni mobile number, anasema ati I'm here. So then how do I reward this ninja now? 300,000? 300,000 advance? 300,000 advance. 300,000 advance. I think Omar's presence will be given to that student who is not working and perhaps really deserves this money. I don't know how to know that student who really wants this money. I should be able to get that as a very good criteria. But we shall overcome. We shall overcome. Thank you very much. Now, ladies and gentlemen, let's go straight away to December 2023, question number 5C. December 2023, question number 5, cow. Umetuma wapi Omar namba wapi? Hatuoni hapa. Mimi sioni mahali popote. Not unless ume inbox kwa Facebook, which then I'll be able to check later. But siku hizi hakuna kitu ya kuficha. Si mimi natumanga hata yangu tu, naekanga yangu all over. So December 2023, question number 5C. So December 2023, question number 5C required material price variance, material usage variance, labor rate variance, labor efficiency variance. And then you get all the marks. So Adan, please advise Omar. Omar is saying he has sent a phone number. Are you guys able to see a phone number? Omar, now you're wasting our time. Is there anybody who is able to see Omar's phone number really here? Because how do I send the money? I can't see it. December 2023, question number 5, cow. Question number 5, cow. So the students who are following me on YouTube, students who are following me on Facebook, and ensure that you are giving me that subscription, and ensure that you are following, and ensure that you are commenting there. Omar, please, where you have written there, I have sent. Why don't you put full stop and then you write your number there? It comes as one sentence. Omar, and you see I'm ending this class in the next 1 minute. If unfortunately you would not have shared the number, then I can have this cash going to Cheryl Akendo. So Cheryl Akendo, just be putting your number there just in case this ninja does not. So December 2023, question number 5C. Yeah, they have given us the standard cost cut. Then we have the actual information in note 3. Then they want me to give them the material price variance. So I want you guys to do that for me very, very fast. Material price variance, material usage variance. Then they want labor rate variance. They want labor efficiency variance. So in my tomorrow's class, ladies and gentlemen, I will be looking at what we call reverse gear, where the examiner gives you variances and then he wants you to work back, get actual price, standard price, backward. And then, of course, I will also be able to mix that with a revision of process costing. Yeah, process costing. So we will be mixing topics like that. Yeah. So the only thing, I don't know whether these guys will be able to accept Mwalimu tomorrow to stay with their daughter at home. I teach from home. Is that acceptable? You are the guys who are sympathizing with me. At least one day, Mwalimu, go and do something with your daughter at home. But you can discuss that on WhatsApp. Yeah, your number cannot be seen, Omar. Your number can't be seen. So then it has been a pleasure hosting all of you tonight. I'm looking forward to reading your answers on this form. On WhatsApp, you guys never send your answers. How comes I never get to see them? Same day, and I never marked. Idakai class yenu nyinyi wachokozi. Because when I talk about tag, mwalimu mark this one until I have to see them. And you see, normally I don't have work to do, especially in China. That's what I normally do in this office. I've got nothing else. I'm an idling teacher, right? We shall overcome. Thank you so much. Thank you. Is there anybody who is able to see Omar's number? I can't see his number. Nowhere. Thank you so much. Have you guys enjoyed the session, the online guys? The online guys, because I'm so sure I'm using a bad microphone. But have you enjoyed the session? Already I can see Mercy Ator has gotten 1310 500 favorable for material price variance. Somebody already has gotten it. Have you enjoyed the session? Somebody, have you enjoyed the session? Have you enjoyed the session? And of course, ladies and gentlemen, if you would want to join RCM College, do not hesitate. This is our number.